All right, well, good afternoon, everybody. And yeah, I'm still the same person. To those of you I haven't met yet, I will confirm that I'm Sheyna Burt. And I am delighted to spend the next, 40 minutes, maybe a little bit less, with you. And we are going to focus on nonprofit internal control, but specifically focused around document retention and the decision to go paperless. And so clearly, if you are talking about control, you have to tie it in to Janet Jackson's seminal album, 1986's Control. I really can't explain exactly why that's where my head went, but that is literally where my head went when I got invited to do this. So that's what we're going to be doing. All right, so first up, yes, I brought music. And for those of you who are not on my Facebook, when I was advertising this, one of the things I said is that if we finished early, we would go through the choreography for Rhythm Nation. So we're going to be very efficient and see if we can't actually get to that. But in the meantime, we are going to start. I know it all. Is that said? All right, so I'm going to talk over this. This is just to put it back in your heads, in case it's been a while since you thought about control. And so we're starting with the pleasure principle. And we're talking about the pleasure principle because we're talking about one of my favorite topics, which is me. So yes, I am an attorney. I have an office that's in Manassas, Virginia. And I also am affiliated with so many nonprofits. I sat down and tried to make a list. Because I want you to know that I know what I'm talking about. So currently, I serve on the boards of Old Bridge Chamber Orchestra, World Doctors Orchestra, Friday Morning Music Club, the Hilton Performing Arts Center, Court-Appointed Special Advocates, Manassas Business Council, Keep Prince William Beautiful, and the ACLU of Virginia. I am president of 3 of those. I play the violin for a bunch of them, and I spend an unnatural amount of time thinking about control. How we organize ourselves, how we carry out our mission, but how we use these internal controls to make sure we're actually getting the job done. Because as important as our missions are, we're still businesses, and we still have to run that way. And it's really easy to forget that and get carried away in the day-to-day. So today, I think because they knew that how I guess I can make just about anything interesting with the use of Janet Jackson, I got probably the least sexy topic you can get in internal control, which is document retention. And so we are going to cover it in sort of 3 categories. We're going to have Let's Wait a While, because we're still in 1986 control, where we're going to talk about my pitch for why, yes, you should pay attention to this. It actually does matter. We're going to jump from there to nasty, because rules, we have to talk about rules. And then we will turn to control. My suggestions for your plans as you're thinking about your document retention and the decision to go paperless. We'll end with funny how time flies, because you're just going to have such a great time that you're going to be devastated to have to leave. Okay, and we'll have your questions then if there are any. All right, so next we get to, I actually have to admit, I didn't remember what song this was. You do? Let's Wait a While? Yeah, I should just have Caleb sing it. Is it too late? Let's wait a while. Janet says don't compete. Okay, so let's wait a while. This is where I am going to pitch you why you should not do what Janet says and wait a while. I want you to jump headfirst into getting this done. All right, I am not too proud to admit the fundamental truth that nobody wants to deal with this topic. That's okay, it's a safe space, you can admit that. I know that for all of you, there's a gala coming up, there is a concert, you have the community cleanup and you don't have enough volunteers. Summer is coming, we will deal with this in the summer when things slow down. There's always a reason to wait a while, per Janet Jackson. I submit to you, though, that you really can't. Because the issues that can pop up suddenly. And when they do, I just was having a conversation with the child care providers, when it pops up, you have to do some pretty fancy, fast dancing to make it work if you don't already have this in place. So, it's not for nothing that the lawyer is here to tell you about this. Why can't just anyone talk? No, because lawyers are especially vested in this. Because the more you hear me now, the less you will pay me later to clean up what it is you didn't hear me say today. So I strongly encourage you to consider my pitch and make this a priority. All right, so three thoughts about why you should ignore Janet and her terrible advice about waiting. First of all, some of the record keeping that we're going to talk about is actually required by law. We're going to come back to that when we get to the rules. But know for now that violation of these laws, they can compromise your ability to stay incorporated if you are incorporated, and you can be subjected to fines and penalties depending on exactly what you violated. Again, we'll talk about that later. I'm guessing that most of you don't have a slush fund dedicated to bailing the organization out. Am I wrong? No? Okay, so I challenge you then to remember that being the money you invest up front is going to save you cash in the end and will save your sanity too. The second thing I want to say with respect to my pitch is that well-intentioned as everyone here is, nonprofits get sued, period. What you don't want is for your litigation hand to be compromised because you didn't have these documents in order. So the discovery phase begins, and they ask for emails going back to 2006. Who's got those? Who has a system for when we're supposed to keep them versus destroying them? Where are those contracts anyway? If you don't have a system in place to track those things, then what can happen is, as you are dealing with litigation, you will find yourself behind the 8 ball, compromising your own good position, as the music is dramatic, compromising your own position because you didn't take care of having an organized system in place. So being organized now isn't just a good practice, it can save you in the end. Thank you, Janet. And then the third thing I'll say in terms of my general pitch for why you should do this is that poor or inconsistent archiving and record keeping, it can compromise the health of your business. So what do I mean by that? Again, I already said, remember that this is a business. How are you supposed to negotiate favorable contract terms if nobody can remember what the contract said? How do you remember the contract we had 3 years ago? Or who among us has been sucked in that vortex of the auto renewal contract because nobody remembers when it expires and what the process is for cutting it off? None of us wants to be stuck in that. Stop. Janet, please. Okay, they get it. Hold on. I'm telling you to be quiet. Okay, so none of us wants to be stuck in that spiral where, because I didn't remember that the contract expired in 2 months and that I had to give them 60 days notice, because nobody was tracking the documents. And because I didn't think back to that time, haven't we been in business with them for like 10 years? Shouldn't they be cutting us a break? You can't properly take care of the business if you don't remember what you've already done. So having those records in place can leave you better situated, or your friendly neighborhood charitable nonprofit attorney, better able to negotiate favorable terms for you. So your ability to make good decisions is absolutely tied to your ability to put your hands on documents when you need them. And God forbid you have an organization that, say, charges dues. Let's say you do. Let's say everybody has membership, and all of us we require our members to pay $50, and we've been collecting that until somebody says, you know, actually, I don't think this is fair. I think I want to be a member. I don't want to pay. And you're like, but the rules say this. And then you look at it, and somebody says, gosh, didn't we supersede that like 3 boards ago? But because you don't have a document retention policy, that you don't know. You have no idea where the organization was before you got there, because newsflash, unless you're the founder, stuff happened before you arrived. And without having an archival and retention and destruction policy, you can get stuck trying to enforce things that actually are not enforceable. So, do it. Take my advice. Just hear me on this. Have one of these processes in place. We actually find a lot of times with my charitable nonprofits that they ignore me completely on this. So as persuasive as I seem, they ignore me, and what ends up happening is they don't address it until the emergency happens. Until the auditor shows up and says, you know what, actually, I'm going to need not just your P&L, I'm going to need the ledgers, and you know what? I think I actually need the source data for those ledgers. And it's lovely if your document retention policy says you keep those things for 5 years, because then you can be like, oh no, they're gone, sorry, it's our policy. But it's not so lovely when you don't have a policy and your files are messy. So have those things. They can protect you. No, don't do that right now. And then, of course, we're talking about so much paper. If you don't have a system for tracking all this paper, it will drown you. I can't think of a single nonprofit I have ever touched that had as much storage space as they needed. Is the exception to the rule in here? I did not think so. So figuring out the process for what we're going to do with the paper, whether we're going to keep it here or we're going to put it off-site, and similarly, what we're going to do with digital files if you make that decision, it should be purposeful because it gets expensive, it gets crowded, and it really is not good to have it be anything less than purposeful. All right, so now we get to nasty, which makes adolescent Sheyna's heart really pitter-patter because she absolutely loved this song, although she had no idea what it was about. Really, somebody should have called like Child Protective Services on my parents or something because there's no reason for me to be listening to this music. All right, so nasty laws. I actually don't think they're nasty. They beat that into you in law school to think that they are pure and good. So today, there are really only two things I want to kind of make you aware of, but I'm going to give you this overall caveat. Whatever you actually are practicing, whatever population you serve, there probably are laws on point about what you have to keep versus destroy and for how long. So I'm going to talk in sort of broad strokes about it, but know that I am doing my attorney disclaimer and saying that you are obligated to figure out what is specific to your industry. So let's start though with the nonstop, yeah. Oh, I do, because I went through all the trouble. There's, look at that, she's getting her whole life. All right, so let's start with the Non-Stop Corporation Act. Here, we are dealing specifically, if you want to jot it down, this is section 13.1-932. And for a change, the Virginia legislature gives us some very specific information about what we must have. I'll just read it. You are required, if you are incorporated in Virginia, to keep as permanent records minutes of all meetings of its members and boards of directors, a record of all actions taken by the members of boards without a meeting, and a record of all actions taken by committees on behalf of boards of directors. So if we're talking about meetings of boards, meetings of the members, actions taken without members, all of those things, you are required to keep meeting minutes forever, for the life of the organization. So theoretically, if you're 50 years old, I should be able to find your 50-year-old minutes. Does anybody do that? No. But you're responsible for it. Now, I certainly don't think that the State Corporation Commission is going to come and get you. But no, you're exposing yourself. And not in a fun, nasty way, like Janet. If you don't make sure that you actually have those things and that you're tracking them in a meaningful way. So you're hearing two things in that statute. Number one, you're hearing that you are required to take meeting minutes in the first place, which is something I have to say again and again. Where two board members shall meet and discuss organizational business. That is a meeting. And I need minutes from that. And I need to have them forever. So keep in mind that just because you're having a work session, or no, we're just getting together at Wegmans, Shane, it doesn't count. If you are doing organizational business, there should be meeting minutes, and you should be keeping them. All right, we're not even done with 13.1-932. It goes on to clarify that organizations are required to keep accounting records. You need to keep records of your members. They require specifically names and addresses. You should, of course, keep copies of your governing documents. So we're talking about articles of incorporation, bylaws, resolutions. All of those things should be stored somewhere. And you're required to have names and addresses of the current directors. Those records you have to keep by statute. And then for good measure, 13.1-932 tells us that we have to maintain for 3 years specifically anything that tracks an action that happens without meeting. That has started to be more of a big deal than you might think. Because how many of you have been outside of a board meeting and just had an email and you're like, oh, we'll just figure it out by email. We're going to take advantage, we're just going to settle this. by email. Happens all of the time. So the statute makes clear that you need to keep a record of when you do that, okay? All right, so let's see. In addition to keeping these, you have to make sure that you are keeping them in a manner that they are inspectable. I don't know if that's the word, but that they are capable of being inspected. So, for example, if we're talking about a board member, disgruntled or not, a member of the organization, a litigant who has come for your organization, all of those folks have the right to have access to your documents. And with respect to members and board members, we're talking about having access within 5 business days. How many of you, again, safe space, if pressed, could find your meeting minutes from 2002 and produce them without a life coach and a Sherpa? See, don't do that, Mary. But for the most part, most of us can't. And you're obligated to, because technically that 5-day clock starts running once you've gotten that written request. Now, of course, they have to be requesting it for a proper purpose, and they have to be doing it in good faith. But if they are, then yeah, you have to be able to get it to them that fast. Yes.
What determines good faith?
Oh, that's a lawyer. No, so basically, if we're talking about good faith, it needs to be it has to be somehow tied to the organization and what the organization does. So if I am a member of the organization, not a director, I'm a member, and I ask for, let's say, the salary information for the executive director. If I'm asking for that because I'm concerned that she's not being paid in a way that's competitive with other similarly situated organizations, that's in good faith, because I'm trying to make sure that my organization is protected. If I'm a member of the organization and I ask for the name and addresses of all the other members of the organization because I run a law firm and I want to send them on my postcards, that is not good faith, because it is not tied to the organization and its mission. So that would be the kinds of differences.
Thank you.
Sure, I'm here for you, Katie. All right, so that nastiness said, let's turn to the American Competitiveness and Corporate Accountability Act of 2002, Sarbanes-Oxley. For the most part, you are free. You do not have to worry about it. 2 exceptions that I want to highlight. First of all, there's Section 802. Section 802 specifically makes it a crime, not a civil penalty, y'all. It is a crime to knowingly alter, destroy, mutilate, conceal, cover up, falsify, or make false entry in any record, document, or tangible object with the intent to impede, obstruct, or influence the investigation or proper administration of any matter within any jurisdiction of any federal department or agency. Said another way, it is against the law for you to purposely destroy a document if you have reason to believe that those documents may be subject to the consideration or interest of any federal agency or anyone affiliated with the government. So where does that usually pop up? The IRS. So part of the reason that we say certain financial information you want to keep for a very long time, if you are in in the pattern of just sort of willy-nilly getting rid of tax information after you filed it, and the IRS comes for you, potentially you are going to have some Sarbanes-Oxley problems. And for the record, Sarbanes-Oxley has a maximum penalty of a fine that is appropriate and 20 years of incarceration, during which time you will be sharing underwear, which is something I learned recently. They don't let you bring your own underwear. All right, Section 1102. Y'all are disturbed by that. That bothered me. Like, I was shook. Section 1102 also makes it a crime to corrupt or destroy a document or to impair its integrity when it's about to be used in an official proceeding. Same penalty, a fine and 20 years of communal underwear. Yes?
I was just going to say, I mean, those 2 obviously both directly relate to document retention and destruction, but aren't nonprofits also subject to whistleblower policies under Sarbanes-Oxley?
That's the third thing. So there really are three things that are applied, but that's sort of outside of the scope of document retention. But whistleblowing is the other thing in Sarbanes-Oxley that actually applies to nonprofit. And if you don't have a whistleblower resolution, then I will come back and we will talk about whistleblowing, because basically you should have a policy for the chain of reporting if someone has a complaint or a concern, and you should have a due process that you lay out. And Sarbanes-Oxley actually requires you to be able to address whistleblowing. So yes, so that's the third thing that applies to nonprofits. I took it out. I had it in, I took it out because I thought, well, it's not about document retention. I've taken my shoes off. I hope that's okay. All right. All right, so we talked about the IRS, we talked about Sarbanes-Oxley, and so now, oh good, thank you for silently reminding me. Now we are at the song that was the title song of her album, where for some reason she is on a swing, because swings are controlled, I don't know. All right, the plan, let's talk about the plan. All right, so first what I want to do is talk about getting your heads right with respect to document retention. The overall things that you should be considering as you are creating your document retention plan. So first of all, I want you to think about document retention or document management, not as just, oh, we have to be organized for the sake of being organized, but really it's a part of risk management. You will make your carrier so happy if you are able to address documents like that. If you are able to find things that you need as soon as you need them. If you can track your documents, you can track what's being superseded, that is you taking control, thanks Janet, in a way that's going to be important to your ability to mitigate your risk of loss, your risk of being sued. The second thing I'll say is that document retention is not just about documents. It's also about the people and processes that are going to be involved in documents and what happens to them. So who's going to touch these documents? Who's not allowed to touch them? Who's in charge of organizing them? What system are you using? Are you sending old documents to a company? Do you keep them in Betty Dean's garage? What are you doing with them? That's my understanding of what everybody does with it. So whatever those processes are, you need to address that in advance. And then, hopefully this goes without saying, but you need to boil this policy down into something that's written. Whether you are the initial incorporator and organizer of your nonprofit, or you're just another in the path of its leadership journey, people forget stuff. And if you want to have a pattern for what is supposed to happen, put it in a writing. That doesn't mean they can't change, of course they can. But what it means is at least people know where we've been, and we can make an informed decision about what we want to do coming up next. And then, as you're creating your list, think categories. So don't just have a scattershot list of all of the documents that we should include. And there's nothing magical about this list, but these are the sorts of topics, the sort of categories of documents that you want to make sure that you are including in your document retention policy. So human resources, in case you can't see it, governance and administration, money stuff, meeting minutes, which we're keeping forever, correspondence and communication, which gets so hairy, especially when we're talking about emails, and now text messages, and potentially social media. And then, of course, litigation. These are categories that you should consider including. Now, yes?
On the category of information you need to keep forever.
Yes.
Define forever as it applies to an organization that disbands or dissolves.
Okay, so if you have a situation, the more artful way for me to say it is for the life of the organization.
Okay.
Once the organization has been dissolved, unless you are, say, distributing the assets in some way that matters to a similar organization, then you might have an obligation to pass those on. But no, you don't have an obligation beyond that. Now that said, the dissolution process is not a short one. So you probably want to have a process that keeps it for a few years, even after the dissolution, and then you can destroy them. Because what the act requires is that you keep them for the life of the organization. You don't have to have, for the organization I set up in 5th grade because I had ambitions, I don't have to still have those meeting minutes. But for the life of the organization, plus a little bit, just in case something goes wrong with the dissolution. Yes, Caleb?
Would that include like a rebranding? So you know how some people flip, do the same thing,
Yeah.
change the name?
Yeah. If at its core, it's the same organization, keep it. When in doubt, keep it. Or at least keep it for a certain amount of time. And if you decide to destroy it pursuant to a policy. This is the biggest CYA policy in the history of attorney CYA policies. If you destroy something and you can say, I did it because we only keep those for 5 years, you're going to be covered, for the most part. Unless you had reason to believe that litigation was coming and you did it anyway.
Can I ask a question?
Oh yes, I'm sorry.
How about liability in terms of what was prior to the existence? So I've been with the organization 15 years.
Mhm.
What happens if I don't have the stuff that happened before I got there and no one else is there anymore? So new board, new executive director, new management in general.
Okay, happens all the time. Most of my clients are actually condos and HOAs, which are nonprofit associations. And nobody ever knows what happened before the board that's currently on there got on there. So, does that free the organization from liability for what happened before? Nope. Now, typically, as a board member or director, you're going to be indemnified for what happened before. You're indemnified by the organization, but is the organization still potentially exposed? Absolutely. So you can't do anything about what happened before you, unless you can. Make a good faith effort. Talk to the president if you know who that president is. See if you can get those documents. If you can't, start clean today. That needs to be sort of your motive moving forward. Do the best thing that you can now. Put a document retention policy in place so that those who come after you hopefully will have an easier time of it. So yeah, the organization potentially is on the hook. You should be okay. I would check the indemnification on language, but apart from that, you should be fine. Okay, let's see. In your document retention policy, so we're talking about when we're boiling it down to a writing, one of the things that you want to also address, not just these categories sort of, and here are the documents, but which things are going to be kept for how long. You need to also spell out what destruction means. So destruction does not mean put them in the garbage. It really doesn't. I actually had an association, this was a homeowners association, who used a property management company who was told to destroy some really, really old documents. And so they set them in this, I guess you would call it a lean-to area, where it was exposed to like the elements, like the paper got rained on, because one of these days they were going to take them to dispose of them properly, but they were going to wait until they got a critical mass of them. That's a bad plan. So your policy should make it clear that when we're talking about destroying them, we are literally talking about shredding. That's what I mean. If we're talking about paper documents. I use a company at my firm. They come once a month and they empty out the magical box with the documents and they take them away and they shred them. If we're talking about digital files, then similarly, you need to talk to an expert about how to destroy files, what that actually means. So that's not just, don't take it for granted that, oh, I deleted it. It still exists, honey. Make sure you get that right. And your policy, you want to address that, exactly what you mean by destroy. Let's see, storage units. I thought someone was going to ask me about it. Storage units, blah, no good. So, storage units, unless you have a really great one, they can expose your documents to pests. Not all of them are controlled in a way that's going to keep pests out. And God forbid, you as a board set it up and then the next board circles on and they didn't know you had that storage facility and now you're on that show Storage Wars and there's some weird guy who's trying to sell your organization's documents. And so these are things that might be private. You might have employee information in there. So the storage company does not care at all about the privacy implications of what you've got in there. So I can't recommend them. I understand because they're cost effective. I just can't recommend them because you have no privacy at all. So your best bet is, if you have to go off-site for storage, to use a company that specializes in that. Yeah.
How would you handle the correspondence and communication for boards and organizations that were, I mean, like, this is basically every committee and board I'm on, but
Yeah.
we all use our private or work emails versus like an organization's emails. How would you keep track of something like that?
Okay. All right, so first of all, to the extent that it's possible to use the organization's emails, do that. Because if you don't, then you are potentially inviting me, the litigator, into your emails to try to find what's in there. Because, well, I know that sometimes Jason was using a personal email, so I need to see that. So I'm going to try to subpoena everything that's in there so that I can dig through them and see what's legitimate. So first, you want to try to stick to the organization's emails. That being said, I hate email. If you are on a board, you should not be communicating by email if you can help it. Just don't do it. If it's an emergency, yes, of course. Like that commercial, her she shed caught on fire, and she had all of our documents in it. And so now we need to talk about that. That's one thing. So we need to figure out, make sure that we're good with getting the fire department there and the insurance carrier out. But you should not conduct routine business via email for these reasons. Because all of that stuff has to be tracked. And someone has to be responsible for it. And then in Virginia, just generally, we have sunshine laws, again, where two board members communicate about organizational business, then that's a meeting. And potentially, not only do you need to keep meeting minutes of it, but you probably should have even given notice. So emails are bad. Now, I'm not unrealistic, I get it. That's how we communicate, it's fast, we get it done. But just know that if you do that, if you make the choice to ignore all this good advice I'm giving you for free, then know that somebody needs to be in charge of what's happening. Oh, and that's a good transition, the somebody who is in charge. Ideally, in your document retention policy, identify that somebody. The somebody who's in charge of tracking down those communications, the gatekeeper. Maybe it's the secretary. Maybe it's whoever on the board drew the short straw. Whoever it is, someone should be in charge, not only of having a policy for collecting all of these things, but also for reminding people, oh, you know what, you have to get me a copy. Did you guys have that meeting? I need a copy of that. The marketing materials you have from that event, I need a set of those. Friday Morning Music Club, I mentioned I serve on their board of governors. They've been in existence for 130 years, more. And so, I haven't been on for all of those years. And so, they have documents that are so old, and they specifically have an elected position that is archivist. And it is that woman's job to harass me every few months about the documents I'm supposed to get to her. So, there needs to be a gatekeeper. And that gatekeeper's function also is to annually, at least, review your policy, figure out what documents you've got, and determine what needs to be destroyed. Now, that doesn't mean they can run out and destroy them. They notify the officers, okay, we've got a batch of documents that are set for destruction. Am I clear? Okay, I'm doing it. And that's how you should do that. So your document retention policy should cover those things. All right, paperless. This is the part where I punt. Okay. The Non-Stock Corporation Act and Virginia Common Law, so the case law, basically provides that the courts are not going to interfere with what businesses do as long as they are following what's called the business judgment rule. So if you are making a decision after using due diligence, doing your homework, talking to the relevant experts if it's something that you're not an expert in, and you are being thoughtful and following your association or your nonprofit's rules, if you are doing those things and you make a bad decision and it wasn't out of malice, the court it's not going to hold you liable for that. Now, the organization still might have to clean up a mess it's made, but you won't be deemed to have acted in bad faith or anything like that. Why am I bringing that up? Because there are arguments on both sides of the paperless debate. There are those who say, no, go paperless, it's better. Go paperless because it allows you to have workforce controls. You can access those docs at home. You can control who you don't want to access them. They say you don't have to worry about aging papers or Sheyna spilling coffee on stuff all the time. You don't have to deal with that stuff. You don't have to have storage space. Paperless, yes, but let's not be cute about it. Data breaches happen regularly. So The business judgment rule, I submit to you, stands for the proposition that if what you are doing is relying on an expert after doing your due diligence, if you talk to a couple of data storage companies, these are online data storage companies, I mean, if you do your homework, you do some research, you check the Better Business Bureau, you see what kind of history they have, if you do those steps before you take the leap into actually using a paperless digital storage company, you'll be in good shape. And that's all that I can give you as a lawyer, is to tell you the processes to follow as you're making the decision. I can't tell you if it's right for your organization. It may be that your data is especially sensitive. So for example, a law firm, many law firms do use cloud-based digital storage, but what I was advised to do was to have a separate server just for my firm, because what happens in my law firm is by law confidential. And so rather than store it in the cloud, we use servers in-house. So you have to make that kind of decision for yourself. Okay, you want a freebie? No?
Yes.
Yes.
Oh, okay, because I was going to say, I was okay. Oh, wait a minute. No, we're still in control. All right. So I'm going to send around, and we're going to sort of dissect in the few minutes that we have left. You'll have to share, so find a friend. This is a sample document retention policy from one of the organizations I have worked with. They did many of the things that I asked them to do. Not everything. That's okay. I can't win them all.
Hey Sheyna,
Yeah.
does anyone know of a document shredding service where you could just have them come out one time or annually or
I use Iron Mountain,
Yeah.
Iron Mountain?
and they'll come when you tell them to. Like, I have them come monthly, but it doesn't have to be monthly.
Okay.
All right. Does everyone at least have one that they can see? All right, so let's take a look. First of all, we start, do they have any back there?
I'm good.
Okay. All right, so we start with your classic attorney whereas clauses, because that's how we make our money. But really what we're doing there is spelling out why it is we're making the decision to do this policy. Nothing too special there. Now, let's jump then to where we have Article 1. You see a record retention chart. And what you can see here is, first of all, the categories that they chose to use. And you can see that they then within each category listed types of documents, and they would address how long that they would keep each of those types. So certain things, audit reports of accountants, you keep those for the life of the organization. But maybe, bank statements, nobody needs all of those forever. So 5 years is what they decided on. And so you just make a call. It may be that the law specifically to your industry says what you're supposed to do. It may be that your governing documents say what you're supposed to do. So for example, a lot of homeowners and condo associations, they are very specific about how long they're supposed to keep certain kinds of documents. So you need to cross-check this against that. Yes?
I know you said some of this is industry specific, but if it's, where is a kind of not one-stop shop to get the federal and state minimums?
I'm not sure there is a one-stop shop, and that is purely lawyer self-interest. I really think that your best bet is to find, because this is childcare, right? Your best bet is to talk to an attorney who specializes in that and have them help you create this policy.
Okay.
All right, Article 2 in the same document, electronic documents. So rather than distinguish in the chart how we're keeping things, what this organization decided to do is to say that basically they don't have so many electronic documents that they need to have their own category. They're going to keep them the same way and with the same timing that they would their paper documents. So that's the call that they made. And then they address emails as well. Now, their gatekeeper, described in Article 3, is the secretary. So, poor secretary, that's not what she signed up for, but now she's responsible for it. And that means the storage of not only the physical documents, but the electronic documents too. So if your vice president has a pattern of storing stuff in his Dropbox account, that's not good enough. And the secretary, as the gatekeeper, is responsible for getting all of those things. Now, when I took corporate law in I think it was my 1L, my first year of law school, our professor made it very clear, no, these are not destruction policies. These are retention policies, and all retention must end sometime. And this is when the retention ends. That's what I should have called this article. Destruction. This talks about what we discussed before, the gatekeeper's annual review, where they make the call about, okay, we're coming up on the 10th anniversary of XYZ documents, time for them to go. And they make the presentation to the president, the secretary, and the executive director. They oversee it, and assuming that everybody agrees it's time to go, then they go. Now, in a perfect world, what I would also like to see is a meeting minute, a set of meeting minutes that reflect that this is what you decided to do. That on, September 1st, we got rid of the documents from September 1st of 2008, something like that. All right, and then they also address official investigation or subpoena, and this is them trying to make sure they steer clear of any Sarbanes-Oxley. And then they have a compliance, which is really just them saying, if someone within our organization violates this, this is how we're going to respond. And then the last page is something that's good for you to do for all of your resolutions. Whenever your board is making a decision to embrace any kind of written resolution, you should have an action record that's attached to it. Why? Because just because someone has a printout of a whistleblowing resolution doesn't mean the board acted on it. And so what you need to do is you need to be able to point to exactly when it was approved and exactly who voted to approve it. Because the first thing that happens when y'all get sued is everybody's going to remember being the one vote who said no. So everybody lost. Okay, let's see. And that takes us to the song that I really, really did not remember until I listened to it. Funny how time flies. Right at 2 minutes to 10 till on schedule. And so this is where I say to you, get some help. I mean, you know what kind of help you need, but get some legal help when you're trying to craft these policies. Because if you're not very, very careful, it can really be a minefield. So, with the soft, dulcet tones of Janet Jackson, any last questions before I return this to Jason? Yes.
I was wondering about I-9s. I had read on the internet that you should get rid of them after a certain period of time. Okay.
Absolutely, 100%. Don't keep them. Don't keep them. Especially, I mean, really, anytime you're talking about something that has personal information, you absolutely want to have a finite amount of time that you keep that, unless it's for some reason trapped in a document that has to be kept permanently, and it shouldn't be. So yeah, those you don't want to keep those forever.
Okay.
Which one was that?
She started specifically about an I-9.
In terms of a 501c3 organization, specifically finances and budgeting, is there a threshold amount that we need to be concerned about regarding the unfortunate encounter with the Internal Revenue Service?
What do you mean a threshold?
Is there a limit? Is there an amount that we have to surpass in order to be accountable? Or
Like in your budget, like you have a certain budget.
Go ahead.
If you're a 501c3, you are required to make some sort of filing
You could do
every
it with
year.
the postcard even.
You can do the 990N if you generally have receipts of under $50,000 a year. Above that, you're going to have at least the easy, if not the full 990. But you're required to do it every 3 years. And if you don't do it for 3 consecutive years, they will automatically revoke you.
Thank you.
So, for example, of the organizations I worked with, Old Bridge Chamber Orchestra, we do ours with, it's basically a postcard. It is so easy. But Rural Doctors Orchestra, which has a much more significant budget, we have to do the full-blown 990 every, so yeah. You should probably, if you've got questions about that, find someone who will do a quick consultation with you to talk you through what your options are. Oh, there you go. Found it. All right.
Thank you.
Other questions? Yes, Mary.
This retention schedule that you have here, I don't see where it's cited.
What do you mean that it's cited?
Where it came from.
Like what organization?
Yeah, who made this list?
It's confidential. So I what I did was I actually redacted the name of the organization.
The reason I ask is because, well, we have something that probably is from the same organization, but I was looking for something in particular and I kept looking it up online, and it kept getting me different dates. This is
Oh, yeah.
3 years, this is 5 years, 7 years, the same thing. Even the IRS was saying you only had to keep your tax returns for 5 years, I think.
So, folks, let me leave you with this. There are some hard and fast rules. We talked about some of them, some of the things that you have to keep forever. But for the most part, the reason we are creating this policy is because we want to have some cover for the decision we make to destroy. So, because it's not like the law is, oh, you only have to keep that for 7 years. You only have to keep bank statements for 7 years. There is no law that says that. And so what we are doing is saying, as an organization, we have made the determination that we will keep this for 7 years, then we will destroy it. And if you have a problem with that, I don't care. Because we use our business judgment to come up with this policy, and it is not arbitrary. What are you doing? What are you talking about, Janet? Stop. So yes, the reason we do this policy is because really, well, it keeps us organized, but also because there really isn't a lot of guidance out there. I saw a hand.
Yeah.
Yes.
I just wanted to pass on, and I defer also to the gentleman here in the corner here with Burkhardt and associates here, that years ago I did some research on this very topic with the IRS. And I came back with the statement that they recommend that you keep records for at least 5 years. However, there is no statute of limitations on a fraudulently filed return.
Correct, it's indefinite.
And that's the caveat they put in. The other thing that was in this research I did was if the IRS comes back at you for a period prior to the 5 years and you still have the records available, you must produce them. So I just passed that on.
That takes us to our Sarbanes-Oxley.
Yeah.
So just because you should have destroyed them but you didn't, your gatekeeper fell asleep, that doesn't free you from the obligation to produce them. Oh no, we should have destroyed them, so we went ahead and took care of that yesterday. No, you still have them. You actually have to produce them. So your gatekeeper needs to be on his or her game, making sure these things are actually being destroyed. But if you look at this sample, they keep their tax returns, for example, permanently.
And related documents.
Yes, and all the worksheets. I want all of them. Okay,
so
I really am out of time.
Yeah, that's all we have.
Yeah. Thank you, guys.
Cool.
Thank you.